I want to welcome everyone back to another episode of Generational Investor Podcast. And I'm that favorite coach of yours, Coach Flo. For those who been rocking with me since day one, I'm definitely implore you to smash that thumbs up to really push out this platform for those who are seriously about financial freedom, serious about paying off debt, serious about getting out of this rat race and living from paycheck to paycheck. So if that applies to you, share it with family and friends, hit the subscribe button, and we're going to continue on talking about passive income. If you haven't checked out my latest dividend, living off of dividends episode, go back and check that one out because it's a game changer. To have monthly, that's one thing. To have quarterly dividend paying stocks, but to have weekly dividend paying stocks, game changer. And leave me some comments. Have you started dividend investing? Are you going to start dividend investment? Leave me a comment below and let me know, because if I'm helping you out, hit that thumbs up. If I have helped you out in the past, hit that thumbs up. And we're going to get things started with number one, talking about turn save money into passive income. That's right, turning saving money into passive income. So we're going to go from, I would say, like a level 1 all the way to like a level 5. All right. This is one of the easiest ways. And I'm glad you asked. How do I do that, Coach Flo? You talking about saving money, but how do I do that? I'm glad you asked. So track your spending. All right. Tracking and spending, reduce your electric bill, because we know we're in the summertime and things are hot and higher. We're going to blast this AC and we're going to have these lights on. So we're going to do things that are going to reduce. And how are you going to reduce that? Getting you some fans. You're going to wash clothes specific hours of the day, take a shower specific hours of the day. Okay, so all that's going to affect your electric bill, and definitely having the AC on is going to be a huge one. So you want to utilize set ways that, because in my house have a Nest, and so the Nest thermostat is already then picked up our pattern of when we coming in the house and when we leaving, and setting a certain temperature in your house. That's going to make a big difference on your light bill. And then moving to cancel unnecessary subscriptions. You already know what time it is. It's a lot of subscriptions that you probably don't use, whether you use your Spotify, you might not even use your gym membership, you might not even use your Hulu, all these different type of streaming subscriptions. You can work a deal, and maybe you got a family, you got some friends, you share their password, the way you don't have to go out and purchase all these subscriptions. So look at where you're not really using these subscriptions, and how about you just say, I'm gonna cut it. All right, so that way you can save up and start to build up. All right, in this area. Moving on to the second one, choose high yield savings account. So we talking about high yield savings account. This one right here, you got to do a due diligence, but the best high yield savings account was about 4.66%. That's right, 4.66%. Use this account, right, to grow your emergency fund for unsuspected bills, anything that might become really emergency. Okay, things break down all the time. Tires, oil changes, parts on the car, washer, dryer, things do break down. TVs, computers, phones. Okay, you got all types of things that happen, and Lord forbid that you might get injured or something, or you might need some type of medical surgery or something. So use this high yield savings account as building up your emergency fund. Okay, so that is definitely, I think everybody needs some type of emergency fund, and just work towards it. If you haven't started opening one up, start one today. Moving to invest in the money market funds. So you also have to do your homework in this department, but the highest money market fund rate was just under 4%. Okay, so these money market funds are mutual funds that invest in low risk securities like short term government debt and corporate bonds that pay income. So it's plenty of these funds out here that can make you money, make us money. Okay, but definitely do your homework and research what type of money market fund best suits you. That's right. Do what's best for you. Moving to invest in dividend stocks. I've said it and I'll say it again. You got monthly paying dividend stocks. You got quarterly paying dividend stocks. And now apparently you got weekly dividend paying stocks. And the list goes on. The best dividend stocks increase their payout over time, helping your future income grow. Historically, stable dividend stock ranges from less than 1% to 6%. That's right. So these dividend paying stocks, I share with you so many. It's Apple, it's Google, it's Microsoft. And if you want to go in the REIT, the real estate income trust, investment trust, Realty Income, that's a money paid dividend stock. You got Main Street Capital, the SCHD. The list goes on. And then, like I said, go back on my last episode and go check out the weekly paying dividend stocks, which is a game changer. I mean, they are a game changer, and I'm glad that it was brought to my attention because I'm gonna start definitely getting the ball rolling. I just, as the time is recording, got my first 3 payouts from these 3 weekly dividend paying stocks because it does work. Okay, I'm not just hypothetically talking. This is something I'm actually doing. Moving to Dividend Index and exchange trade funds, which are ETFs. Set it and forget it. A dividend ETF or index fund will invest in a selection of stocks that pays dividends. So these things right here can really grow your portfolio over time. The SPY, which is the SPY, VOO, VTI, QQQ, all these are ETFs that I'm either buying for me or buying for my son, because when I say not only they're going to pay the dividend, or I should say the ETF going to pay out a dividend, but over time, you're going to get on average like 8 to 10% yearly return. I mean, who wouldn't want that when it comes to what you would say putting that same amount of money in the bank and you only get 0.001. So example, if you start with 10K, that's right. After 1 year, you will have made just over $500 at a rate of 5%. So you do the math. Okay. We're talking about getting a good rate of return on your money. And that's what I want you to consider as you are tapping in to passive income, as you are building up your portfolio, and as you getting started, because I have a lot of new newbies who tuning in and they trying to figure out, where do I start? Where do I go? Like I said, download these zero commission apps like Robinhood, like Webull, like Moomoo, like Fidelity, all these things, and fund your account, whether it's $50, $20, $100, $200, $500, whatever you can afford to invest. After you fund it, you go ahead and you purchase these stocks, these ETFs, as little as $1, because that's what you call fractional shares. You can fractional share in Webull, you can fractional shares in Robinhood, Fidelity, all that. But the goal is to invest in yourself. If you tired of living from paycheck to paycheck, if you tired of trying to figure out how I'm going to make ends meet, the time is now to invest in yourself. Because who's better than you to invest in yourself? And so I hope you have enjoyed this episode. Hit that smash that like button to let other people become more generational investors and let this platform expand out. And I pray for your health and wealth. Continue to share the channel. And like I always said, don't let no one tell you what you can or can't do, because it can happen through who? You. I see you next one. Peace.